Don't stop even for the right thing. Doesn't matter what I say. My whole world was by that river.
Woo! Here we go. Welcome back. What a day. What a day. I think I've been on my computer all freaking day, and we are back. The chat is cooking. We got some people here. The crew is live. Let's just turn my screen off. There we go. The team's back. All right, here we go. Welcome back. We got True North, episode 27. We've got a very dense agenda. We are going to hit this hard. This is the investment grade Bitcoin podcast. We're talking about all things Bitcoin related equities and diving into data and details, state of the market, what's going on with leverage, what's going on at Twitter, what's going on in the news. And we're going to try to get through a ton of information in a short amount of time. So the agenda today, we're going to talk about BTC price discovery. Awesome. We're in price discovery. Obviously, MetaPlanet limit up. That is the biggest topic of the day. It's the biggest topic of the week. It's taken over all of Twitter. This seems like GME 2.0. I get the same little butterflies in my stomach watching all of this stuff happen. So pretty crazy there. We'll spend some time. We'll dive into it. We'll work around what we know, some of the data, and just kind of play with it a little bit. We'll get into a market update. We'll talk about strategy, talk about leverage, how that looks, what the price action, the poor price action today relative to the rest of the Bitcoin trading equities. There's a lot of poor sentiment out there, and we'll talk about it. We'll steel man it, and we'll try to work our way through it and see where we could be wrong. I think this is a long-term hold, but we'll get into it. We'll dive into the topics and the details. Then we're going to talk about the BTC treasury revolution. There's the finance is literally being rewritten as we know it. We're seeing it in real time. We're seeing new metrics come to the scene. We're seeing everybody digest these new metrics, trying to conceptualize them, wrap their heads around them. You can get a master's in science of Bitcoin just by listening to all of the content that's on X these days. We'll talk about MSTR Q2 earnings and the S&P 500 scale, what that looks like on the horizon. Strike and Strife, we'll do a quick primer, and then I've got some analysis on Strike versus real estate and fixed income. And I think a lot of people that have fixed income portfolios, these old boomers are, apologies to the boomers that may be watching this, they are reconsidering the dynamics of their portfolio, the relativity of, all of the other things that they're holding and how they fit into a portfolio. So again, as we've talked in episodes past, this is the evolution of a Bitcoin portfolio. You can now effectively have a Bitcoin portfolio with risk-adjusted returns and different securities that are Bitcoin correlated on all aspects of the risk spectrum, and they're only getting bigger and more complex. So with that, Bitcoin, let's see, where are we at? Share the screen. Bitcoin, oh, we got an ad here. Bitcoin at 109,928. We are this is the fifth largest asset by market cap. I think this is a topic that just so many people are unaware of. And this is my foray into orange pilling people. As I mentioned, that Bitcoin is the fifth largest asset on the planet. It is a $2.18 trillion asset that is completely decentralized, right? You look at the scale of some of these other assets like Microsoft, Nvidia, and Apple, they've got thousands and thousands of employees. And here at number 5, you've got a decentralized computer protocol that is the fifth largest asset on the planet, soon to be number 1 in short order. So I'll start there. I'll pass it over to you guys. How are you guys feeling, right? There's a lot of things going on. I've been at my computer all day. I couldn't sleep last night. It's feeling a lot like somebody says I need a sip of bourbon. Hold on real quick. I've got my Yamazaki, shout out Japan. And that's what we're cooking with today.
I couldn't feel better.
I see what you mean. I like that.
I put in my 2 weeks notice in December, and January and February, I was like, should I check to see if my job is still been, if I've been replaced? Is my position still open? Like, might have to go back to work here. So everything's right with the world now. I'm good to go.
Good to go.
Yeah,
A lot of
I
noise. I mean, anything Bitcoin correlated is up today, with the exception of MicroStrategy, was pretty trash. Yeah, how do you guys feel about it? What's cooking there?
I don't think that means anything necessarily negative. No, this is something that we've talked about, right? Just because strategy is having a down day and other leveraged Bitcoin equities are up doesn't mean that the trade is broken or the investment thesis is broken. There's too much that goes into the price activity that we're seeing. There could be a myriad of reasons as to why that is. I think that Bitcoin being up bodes very, very well for our collective future, and it bodes well for strategy's future. So I do think people need to take a moment to understand where we're at. I mean, Bitcoin is at 109, 110. Strategy is over $400, which in my mind tells me is over 4,000, because that's how I see it. Because I've been in since before the 10 for 1. So I think we are in a tremendous place. We're up over 100% since last year. I think things are good. We just have a lot of new narratives that are the new shiny thing, catching a lot of attention, and I think people may be they're getting dragged along in that narrative, which is fine. But
Yeah,
to each their own.
and that 400 price that you mentioned, I mean, strategy blew up a little early, right? So November hit a little bit before Bitcoin's first all-time high of like that. I think that was more like December 13th, December 17th, something like around that area. And the strategy was trading at 400 then. So I think that blow off top was a little bit misleading, and I think gives people that really unjustified expectation that every single Bitcoin pump should be a blow off top. I don't think that's reasonable.
It isn't. And also, we had a lot of dynamics that were working as significant tailwinds that were working to our favor, right? Liquidity was high at the end of Q4. We had high sentiments. We had a lot of excitement around in the market. I think that blow off top, to your point, made people have a lot of unrealistic expectations. But I think right now you have a mixture of people where expectations are getting tempered, but at the same time, you have people where expectations are being dashed. And what we're seeing in the market right now is that individuals whose expectations are being dashed are perhaps having some of the loudest voices, while individuals that have tempered expectations or more realistic expectations are fine. They're just not being as vocal about it. So the loudest commentary often gets the most traction. The most negative commentary often gets the most traction. And I think a lot of that is prevailing the sentiment that we see online and in the markets right now.
Yeah, and I was one of the people FOMOing into the 1080s in November too. Like implied vol was jacked through the roof because there was so much euphoria in the options. Everybody's just rolling up and up and up, and that's gonna play havoc with the price being stoked by the options market as well.
I think that's a really interesting point. I mean, implied vol is at almost the 0 percentile, so it's quite low in MSTR.
What do you mean by 0 percentile? Just to explain that to everybody.
Yeah. 0 percentile means of all the trading days in MSTR's history, or since they've adopted a Bitcoin strategy, typically the window is the past year. So I think for the sake of 0 percentile that I'm using, it's the past year. So of all those trading days, what is the implied volatility or the future expected volatility of MSTR priced into a 30-day option? The call and put should be about the same at the money. So forward looking. And it's lower than it's ever been. So people are expecting very low volatility, or people aren't willing to pay for the volatility. And what that means is people are expecting the stock to kind of trade within a range, or the future expectations of volatility are very low.
Future expectations, yes. So when IV is high, there's a lot of energy in the call or put side of the trade that are expecting the stock to move quickly in any one direction. And that could be a function of traders pushing energy into one side of the trade. And now that there's opportunity cost of capital for some of these really fast moving Bitcoin treasury companies, that opportunity cost of capital goes from tail options in MSTR and shifts over to where that volatility is, right? Like these are vol junkies that are moving in any direction to the place where they can capture that volatility.
Yeah, and I think it's a new beast for a lot of people, considering in the fall we saw 25%, leverage to equity ratio via converts. Now we're looking, was it higher? 30%?
Oh no, keep going. Keep going.
Oh, sorry. Whereas now we're seeing that leverage coming in the form of preferreds, right? The majority of the leverage right now, or about it's about 1/3 of the leverage is preferred stock as opposed to converts. And the entirety of the leverage is about 16% of the equity, as opposed to in the fall when it was closer to 25%, 30%. And so that's dampening volatility. And I think people don't know what to make of the preferred debt. And I'm still trying to make up my mind whether or not it's going to lead to the same sort of volatility that convertible debt has led to in the past.
Right. We're going to take a time out here real quick. Hold on.
Ladies and gentlemen, what you're about to hear may be amazing, but it is not financial advice. It's for informational and educational purposes only. Jeff, back to you.
Thanks, Tim. All right, we've got Tim, not financial advice. That's out of the way. We're cleared. We're good to go. I'm learning how to use all this new tech. I'm this old washed up reinsurance broker that's figuring out how to do media stuff. So we are back.
That was the best cameo ever.
It's a good cameo. He's all tied up. He's in his office.
Yeah, so people are constantly asking me, when IV go up. That's all what the options junkies want to know. And I think it's pretty simple. The IV is determined by what people are willing to pay for the calls, right? So it's either that people are not willing to pay that much for the calls right now, or the sellers are not requiring that much because they're not really afraid of God candles and getting wrecked. And I think it's just a direct result of we're at the low end of the leverage range. That if we were levered up with debt more, I think that the call buyers would be like, oh, okay, if we're levered, then this is a more levered play, like an MSTU or an MSTX. So I'll pay more for those calls. And I think as soon as we get some convertible bonds, as soon as the preferreds market starts to develop and we really start hammering the ATM on the preferreds and the debts comes up, I think IV returns. I think it's pretty much that simple.
Well,
Yeah,
there's also been just so much pressure pulling this thing down, right? Like you look at the assets under management of Misty and watch how that's grown over the last 3 months. It's gone from 2 billion in AUM to 4 billion of AUM of weekly call sellers. That's dampening volatility, right? That is shorting the stock every week to monetize that volatility. And you're seeing other products go that direction as well, on top of ATM pressure, which has, scared away some of the options traders because of the more liquidity in the market. So it's super difficult to quantify an option position, right?
Yeah, I think that's a good point.
Well, I think people grossly underestimate the impact of how the options market, plays into this whole price dynamic that we're seeing with the volatility. But there are a lot of individuals that, and guys, correct me if I'm wrong, that I'm seeing on social media that are essentially in strategy just for the options, right? So I think a lot of them are also creating this narrative that the trade is breaking down, that the investment thesis is breaking down, and are being hypercritical about it. Because to Jeff's point, to Jeff and Soleil's point, they're looking for a particular outcome in the options. They're not getting it. And in my view, they're just getting pissed off, and they're either exiting the trade or creating a lot of noise around the trade. So I think people need to come into an understanding of, are they going to be a trader or are they an investor? If you're an investor in strategy, I think you need an entirely different view of this opportunity versus if you're a guy trading options or looking to trade this stock on a day-to-day, week-to-week basis.
Yeah, it's interesting. I mean, we're talking about MSTR on the Investment Grade Bitcoin podcast, and one of the components that I think a majority of the market is kind of failing to grasp or recognize, I think, at the moment, and this is me saying I am long on everything that's touching the Bitcoin ecosystem right now. I'm just bullish on everything as it goes into price discovery. I'm going to start with that. But I think risk is being miscalculated, and like risk adjusted yield is also important to think. If you're creating an optimized portfolio for, risk adjusted returns, I think you need to, it's critical to think about like, what is the risk of some of these equities, downside, upside, like what's the return, what's the infrastructure, what's the architecture, all that stuff. So it might be time to get into MetaPlanet, because I know that's what everybody wants to hear about and talk about. And maybe we just jump into like a little bit of the lay of the land, what's going on, at least some of the data that I'm aware of and that I know, and then we'll see what you guys want to talk about.
That sounds great, Jeff.
Sound good? Okay. So I'm going to pop over here, and this is Japan's bond market. So this is the background of what's going on in Japan. So this says Japan's bond market is breaking. The 30-year is at 3.13%. The 40-year, they have a 40-year bond, which the U.S. doesn't have, which is interesting, is hitting all-time highs. So you've got pressure from the bond market. So when the bond prices are going up, or when the yields are going up, bond prices are crashing. They're going the opposite direction. So if you have a bond portfolio in Japan and you're watching this happening, you're fleeing to stocks, you're fleeing to equities, because your bond portfolio is just getting totally hammered from interest rates going up. So we're seeing some pressure, significant pressure in Japan, and I think they had a couple failed. What is this? A couple of failed treasury auctions. So they had nobody wanted to buy the debt, which is a signal that's a tricky place to be if you're an investor in Japan and you invest in bonds. You're looking for alternative places to go. And I think this is part of the whole Japan carry trade circumstance, but that's a little bit beyond me and how this all kind of plays together. The other thing that's going on in Japan, so there's these accounts. They're basically like IRAs in Japan. They're called NISA accounts. And these are effectively retirement accounts. So individuals can invest up to 1.2 million yen, 80,000 per year in these NISA accounts. And these are exempt from Japan's 20% capital gains tax, which is an important statistic, because in Japan, any gains from crypto are taxed at the ordinary income tax rate, even if you've held them for longer than a year. So at the highest tax bracket, you could have a 55% tax on holding Bitcoin. So how do you get this exposure? What's the most efficient way to get this exposure? It's in a NISA account. It's in a Japanese retirement account because of the capital gains treatment. Additionally, there's no ETF in Japan. There's no Bitcoin ETF specifically in Japan. So they've got the benefit of no access to an ETF. I think investors in Japan can buy MSTR, but maybe not in NISA accounts. I think you've got to be like in Japanese equities. So you've got pressure that's coming in the door trying to get this Bitcoin exposure, with the backdrop that you've got, bond market is ripping and people are looking for safe havens. So on top of that, you've got so MetaPlanet is the most shorted stock in Japan at the moment, and they are betting against MetaPlanet stock. This is very similar to what we saw with GameStop. However, the difference here is MetaPlanet is holding, and all of these stocks that these hedge funds are shorting, they're holding Bitcoin, which is the strongest asset on the planet, about to go into price discovery and rip to the upside. In terms of you can't turn the buy button off here, right? It's almost the complete opposite. You can't stop Bitcoin. It's hard to break the sentiment because people are just piling in. So it's a unique framework here that you've got. This is a shorted stock in Japan. Additionally, with what's going on with MetaPlanet, I think one of the fastest growing Bitcoin treasuries, right? 12 months ago, they had a hotel and some cash. And they started with 300 Bitcoin, then 1,000 Bitcoin, 2,000 Bitcoin, and now we're up at nearly 7,000 Bitcoin as of last week. I'm sure they'll have 8,000 Bitcoin next week, growing incredibly fast. And one of the ways they're doing it is that they are selling moving strike warrants. And moving strike warrants is effectively the Japanese version of the ATM. It happens on the next day. It's a little bit of a tricky, complex structure. It's a bit difficult to understand, but just think of it as the ATM. So if you hear moving strike warrant, that's just an ATM. they only sell shares when the stock is moving on up days. So they're not selling on down days, which avoids that dilution scenario when the stock is moving down. Additionally, like within the Japanese market, I'm pretty sure you can't short the stock on down days either. I think you could only short the stock on days that it's going up. So you've got a lot of pressure that's coming in the door to buy the stock, and the shorts are coming in when the price is going up. But there are no days where it's going down. MetaPlanet isn't issuing any more shares when it's going down, so there's no additional relief from the hedge fund's perspective when they need to buy back the shares for the short position. So it's the architecture of the market is very unique in Japan, and I think this is the second or third largest equity exchange in the market as well. So this is a pretty big deal. It's a $6 trillion market, and it's a what's going on here is pretty significant. Anybody else have anything to add? I've got a few more things, but I need a breather.
Yeah, I think this is a perfect example of what Bitcoin is ushering in, which is within corporations, is just competitive cooperation. Before it was like cutthroat, but now, and Saylor was kind of dragging and curb stomping Microsoft and the Mag 7 at the World Conference, and it was kind of like putting everyone on notice. If you're not a Bitcoin treasury company, then strategy is the apex predator, and you're about to get eaten. But if you become a Bitcoin treasury company, and now we're cooperating, we're still separate companies, so to a certain extent we're competing, but we're now cooperating. And now, Saylor will tweet when you buy Bitcoin. And MetaPlanet is just a shining example of, instead of, strategy being the apex predator, they're like the apex benefactor. And, you want to be the next company to do this. You want to be inside the tent, and benefiting from, from cooperation. And it's just, it's putting every non-Bitcoin treasury company on notice, I think.
Yeah, because this is a cooperative trade, like you just mentioned, and Bitcoin's underpinning all of this. It's to everyone's incentive to drive the price up and to get as much interest in these cooperative plays as possible. And Jeff already touched on all of it with regards to the dynamics in the bond market in Japan, and the fact that the short interest is so steep. Well, it's crushing actually for the shorts. The fact that the moving strike warrants interjected in a completely different dynamic. The Japanese and Asian markets, well, the Japanese market specifically doesn't have an easy vehicle to get Bitcoin exposure. There's just so many different dominoes that are lining up perfectly for this thing to just keep running, and each one acting as a feedback loop into the next. And it's really interesting to watch happen in real time right now, where you have different companies, you have the CEOs of different companies interacting with one another, retweeting one another, saying to buy Bitcoin, saying why it's a good investment opportunity. This is a whole different scenario that I think the market is just not used to. And to Soleil's point, when you look at those dynamics in a market that's traditionally very dog eat dog, and now you have the dogs forming a wolf pack instead, it creates a very, very different dynamic that I think traditional markets are going to have a hard time adjusting to.
Cyber wolf pack.
Exactly. Yeah. It really is, because think about it. Saylor's retweeting Simon. Simon's retweeting Saylor. Eric Semler's retweeting Saylor. Saylor's retweeting Eric Semler. They're all helping each other out. It's wild to see happen in real time.
It's totally crazy. I mean, it's totally crazy. It's hard to. I'm imagining this. One of the reasons I've been up all night on my computer all day is like I'm trying to conceptualize where this goes, how to put some numbers behind it, what's the framework, who's involved, all of these different things. And it kind of seems to me like there's going to be a strategy in every single jurisdiction on the planet. In every equity market on the planet, there's going to be a strategy. And it's like I don't want to say winner take all, but it's winner take most. If you're first in that jurisdiction and you are the vehicle to accumulate Bitcoin, it's pretty much winner take most. And and that's kind of what we're seeing play out. And it'll be really interesting to see how this MetaPlanet situation or the short side of the MetaPlanet situation unwinds. I'm sure Simon and Dylan, I'm sure these guys are getting phone calls off the hook to do private placements on shares to clear the short positions. I'm sure of it, because the only other way to do it is on the open market, and they could choose not to take those calls, et cetera, but they should be capitalizing on those phone calls and those opportunities, and they should rake them over the coals to do it, right? Like the alternative is I'm just trying to wrap my head around this, is like, this is a huge liquidity event for the Bank of Japan, right? Like if these are Japanese based hedge funds that are shorting this, which I have no idea where the capital is coming from that is shorting this. If they go down, they start liquidating everything else in their portfolio because of this position, and that could cause a domino effect on other things in the market, whether that be the Japanese market or the US market. And we're in this like global economy now where energy and money moves incredibly fast, and it's all algorithmic. So it's hard to imagine a scenario where this doesn't lead to significantly more money printing and more liquidity, which Bitcoin just continues to soak up, which rises the tide for all of these other Bitcoin treasury companies. I couldn't imagine a better time to be a Bitcoiner, right? Like, this is the best time on the planet to be a Bitcoiner. Hold Bitcoin, holding Bitcoin equities, adding to your Bitcoin stack, having exposure. I can't believe that most of the world has no idea this is going on right now, right? Like, go walk down the street and talk to your neighbors, right? Like, nobody has any idea this stuff is going on. Meanwhile, we're running around yelling from the top of our lungs, like running around with heads cut off because MetaPlanet limited up and is up 100% on the US market, and trading in all these different marketplaces and all this stuff. Nobody knows this is going on. This is like such a quiet thing outside of the FinTwit sphere.
Well, to that point, there are a couple of guys I know that work at hedge funds here in Scottsdale, and one actually works closer in Dallas. I was texting them and trying to talk to them about MetaPlanet, and their exact words were, "What's MetaPlanet?"
Yeah,
and they work for I don't want to dox them, but they work for rather large hedge funds in the local area, and it was kind of shocking that they didn't know what MetaPlanet was, but they knew about strategy, which was somewhat weird. But I think the dynamic we were seeing playing out here, kind of back to Soleil's point about it being a cooperative trade, is there's a lot of synergy here. And I think when Bitcoin really starts to run, because right now it's a little bit, it seems like we're going into price discovery with Bitcoin, right? So if Bitcoin really starts to run right now, you could have all these other equities that exist on top of Bitcoin running simultaneously for an entirely different set of reasons. How do people try to trade that? You see Bitcoin causing similar run. You see Bitcoin maybe causing MetaPlanet and Strategy and Strive and whomever else to run all at the same time, all for a different set of reasons. It makes it almost impossible to anticipate because one equity is not going to react the same as another. And you can very, very easily get caught on the wrong side of a trade that's going to blow you up.
Yeah, I can't stop thinking about the Wolfpack thing because Jeff Booth.
It is a wolf pack. It is a cyber wolf pack. You coined it, but yeah, it's a cyber wolf pack for sure.
So Jeff Booth likes to say that the future of Bitcoin, the future of the world, looks like 8 billion people in service of 8 billion people. And what you just said about that makes me think of, what does the world look like when there are thousands of corporations in service of thousands of corporations? Just this giant network of cooperation. My mind is getting a little bit twisted upside down, imagining what that looks like, because it doesn't look like anything that has ever existed.
I think here's what it looks
yeah,
like.
You've got to redesign the entire, like, the world from the ground up and from a cooperative point of view. And this is one of the things I always hated about, like, the traditional financial ecosystem or the traditional financial world is you basically, in order to win, you had to be born into the right family or you got to cheat. And I hated it. I always felt like icky, right? Like, what, like,
or you have to
I
effectively
didn't
screw the other
belong.
guy over.
Right, exactly. You got to cheat.
Yeah.
And this is this Bitcoin ecosystem is so much more appealing to me because it's cooperative, right? Like there is a rising tide here, right? Like as long as you have Bitcoin as your core, right? Like there is that rising tide situation.
So to really think through what this looks like, people, I know there's some people that are saying that right now we could be in a bit of a frothy stage with regards to the Bitcoin treasuries and the Bitcoin equities. I don't think we're there yet. What does a blow off top in that kind of a scenario really look like? Where's Bitcoin at in that kind of environment? Is a blow off top caused by too many companies adopting a Bitcoin strategy too quickly, or is it caused by Bitcoin getting progressively more upward buying pressure, and then causing a blow off top with some of these companies and a bunch of companies piling in at the end, causing some kind of a, I don't want to say a bubble, but some kind of a retrace? Like what does it lead to? Is it a steady increase over the next several years, or are we going to experience the same kind of boom and bust cycle? I know what my theory is. I'm just kind of curious about what your theories are.
Yeah,
I
I
mean,
think it's boom and bust.
There's not a ton of leverage in the system right now, which is so funny because the traditional financial world will just say, there's sailors taking on so much leverage. And it's like, well, their leverage ratio is actually at all-time lows, and they're sitting on a $60 billion balance sheet, and they could crank it up. Whereas last cycle in the peak, their leverage ratio was at like 50 at the peak. And then it came down to, 108. Like they were over, they had less assets than they did have debt on their balance sheet. So everybody's just so much stronger right now. I mean, MetaPlanet is incredibly strong right now. They've got a little bit of debt on their balance sheet. I want to say their like leverage ratio is like 5 to 8 or something like that. But if you if you go watch the recent, I highly suggest, if you're interested in what's going on with MetaPlanet, go watch the video with Richard Byworth and Simon Grovich. Very good video. And then also what Climb and the Bull Rider guys are doing, like and Peter Dewan, go watch that. I think they've got some good content. So it's really, really fascinating what's going on over there.
Well, so really quickly, here's my thesis on it, why I don't think we're going to see the same kind of a blow off top. We have too many institutional players in the market right now. This isn't like alt season. They're not incentivized to sell at the end of the market. They're not incentivized to rotate into Fartcoin or some nonsense like that. They're incentivized to stay within the market, control the market, and drive the price higher. If you have corporate players that are adopting this strategy, what incentive do they have to sell Bitcoin? Why would they sell an asset that caused crazy appreciation and volatility on their stock just because it had a retrace? If anything, they would try to reproduce those circumstances again, wouldn't they? Versus selling. So what I'm getting at is, where does the sell pressure come from? Because traditionally, I think we had boom bust cycles because people were going from Bitcoin. They were making the gains there. They're going into altcoins, making gains there. Then they were selling, and the liquidity wasn't coming back into the market. Now we have strategies similar, MetaPlanet, IBIT, FBTC. They're buying. Where does that equivalent sell pressure come from? I think we do see a retracement. I don't think we see 80%. I think it's likely. Let me rephrase. I think it's probable that the retracement that we see is far less significant than we've seen in previous cycles, because the same dynamics no longer exist. People still waiting for alt season. It's not happening. I don't think it is.
Yeah. I don't think so either. And you think about what's the solution here, right? If all these hedge funds are trapped and this triggers like a global economics collapse because of poor risk management by some traditional finance bros running hedge funds that are salty about Bitcoin going up and it's actually not going to zero, then you have a print of epic proportions and everybody's got to figure out what to do. Right.
Or you're going to get caught with your pants down.
Or you're caught with your pants. So it's like, okay, if that's the case, then you have every company known to man figuring out in a very harsh reality that their dollar isn't worth much anymore because there's this huge print of epic proportion, and you've got to look for harder assets and things to hold. And people will find this, but it will take time and it could be painful for a lot of people.
And as we speak, by the way, Bitcoin is running to 111K.
I love it. 110, 853. I love it.
Yeah, I think the boom and bust thing could happen if, let's say, instead of earnings reports being like, okay, let's see who has the most EPS or, who can move the most widgets. If it comes down to like, okay, now it's an mNAV measuring contest, and I gotta have a bigger mNAV than the next guy, and the only way to get it is just to lever up more, and then the next company levers up more, and then the next company levers up more. Somebody's gonna over leverage and get wrecked.
Well,
Probably.
And people are gonna be FOMOing in with leverage, and it can't go up straight up forever, and those corrections are gonna cause some people to get crushed.
the one pushback I'll give to that
because
is
it's reflexive.
oh, go ahead.
Yeah, it's because it's reflexive, right? We've seen the periods of time during which MSTR has been able to yield the highest percentage-wise BTC yield and issue the most ATM is during those times when the multiple is the highest and the FOMO is the highest as well. And that's the same for most stocks, most of these Bitcoin leveraged equities. And so for that reason, I think it works up, and then when the pin drops and it starts moving back down, it's difficult to keep that yield higher. So that new metric that people are using, Adam Beck created, days to cover mNAV. That's a really great metric. It's historically looking and it's historically facing, and you're extrapolating out that continuation of that yield. It can diverge very quickly for any sort of company. If a company ramps up their purchase, their multiple expands, they ramp up their purchase, the days to cover mNAV quickly converges to the other companies. Whereas if the multiple compresses for a different Bitcoin equity, then their days to cover their multiple slows down a lot. So there's a lot of independent variables for days to cover mNAV, but I think it's super interesting.
I read this 3 times, and I need the ADIQ version explained to me.
Well, and the only pushback I'll give on that is that for me, just in my opinion, mNAV is primarily sentiment. You can't really manipulate it. You can only react to it. So I don't know. It is possible, but again, just in my view, I think that you can't really manipulate sentiment so much. You can really only react to it effectively, and that, to your point, could create dynamics where we have a whipsaw effect, where people are not reacting effectively, where they're not being proactive in their strategy. They're being perhaps too reactive or not active enough. I don't know. There's all kinds of ways you can play it out. So not saying that you're wrong. I just want to throw a little wrinkle in there for consideration.
Mm-hmm. Yeah, and I don't like mNAV as a goal. Like if I'm a company, I'm not going to be like, you know what, I'm going to try to get the mNAV to X, 1.x, because I think it's Goodhart's law that it says when a metric becomes a goal, it no longer serves to function as a valid metric, because now you're kind of like distorting the free market inputs because you're trying to game the mNAV into something. So if you just measure it, it's accurate. But once you make it a target, once you make it a goal, you're kind of corrupting the metric itself. So
it's a moving goalpost.
Yeah.
Is what it is, and that's why I primarily think of it as a measure of sentiment, and that's why I say it's only something you can react to. So to your point, trying to game your trade to manipulate mNAV in a variety of different ways, I think is setting yourself up for trouble.
Yeah.
Yeah, this days to cover mNAV, I think is really interesting. I mean, some dynamic that it doesn't take into play is like the underlying architecture of the market as well, right? I mean, one of the reasons I think that this is high for strategy is just because of the architecture of the market. Like they have this passive bid, they've got a huge moat. There's nobody else that can catch them. And so I think it kind of comes back to this risk component that I don't think is taken into consideration in most of these metrics that are created today. And I think it can be folded in. I'm just not exactly sure how. I'm trying to crack this at the same time, where it's like risk adjusted days to cover mNAV, right? Like how many units of risk are you taking on in order to have that kind of yield?
I think that's really interesting, Jeff. Totally agree. And people don't think about it like that enough, right? If you have a 5-year track record acquiring BTC per share and doing it effectively, then even if your days to cover mNAV is longer, shouldn't it be priced higher because it's a more reliable future looking expectation?
Right.
If that makes any sense.
And one, I mean, for me, like how I kind of view this as well is like one of the risks. I'm trying to develop a risk framework for what this looks like, and one of the risks here is copycat risk, right? Like, what if somebody comes up and pops up in your marketplace? It's got more money than you, buys more Bitcoin than you do, and starts running this strategy. Now, how quickly can they do it? Can they catch you? And that's I think that needs to be taken into consideration for some of these mNAV metrics. And right now, like everybody in the market that's in the market doing this, they've got so much of a head start. Maybe it doesn't matter right now, but I think as this market evolves and we're going to start to see a lot more people come into the scene here, right? Like the next hot broad's going to come walking in the door with lingerie on, and you're gonna be like, whoa, like it's the classic meme of it, flipping your head. Let me check that one out. And I think that's going to happen, right? We're gonna, like we saw MetaPlanet Madness podcast pop up. We're going to see that pop up with all of these other entities in these other jurisdictions, and everybody's going to be fighting for media attention and retail attention. So yeah, it's
yeah, and that's why, and I'm not trying to say one metric is better than another. That's why I think about mNAV the way I do. I just think that it's you can theoretically manipulate mNAV in a short term, but long term it's not something you can actively manipulate and pivot up and pivot down as it suits your strategy. So that's why for me, while this is an interesting metric, I just want to make sure that I consider it in the totality of what mNAV is versus trying to think of it as a simplistic metric. Because mNAV, in my view, is a point in time and it's going to shift. And you can manipulate at points in time. So days to cover mNAV for me, I have trouble kind of grasping it.
Yeah, and it's like, okay, this is a cool metric. Does the entire market use it?
Right.
Like, do all of the algos use it? No.
Precisely. Yeah.
Like the Soleil, you're like, I need the 80 IQ version, right? Like, how many people are saying that, right? Like, yeah, it's an interesting data point, and it shows, I guess, kind of efficiency. I mean, even Adam Livingston created this new, hey, I'm not in dark mode here. Adam Livingston created this new metric, torque adjusted BTC yield, which is, I think a little bit based on some conversations we had about risk adjusted, but torque adjusted, talking about efficiency of the BTC yield and how efficient it is calculated. And it's interesting metrics that are coming into play here. And this is what I was saying, like the world of traditional finance, like you can get a master's in finance just by watching what people are doing out here on Twitter and like literally build the future. Everybody's building the future at the same time.
And to that point, that's what's so great about this. We have guys that are not big hedge fund players, that are not, multi-millionaires pushing the market in which way, that are doing this high level analysis. Is really a case of the group environment front running the hell out of traditional finance, and it persists. The more of these leverage plays that come out, this front running of the retail player, the retail investor over the big player, is just the trend is not stopping. It's only getting more and more great. And I just think it's fantastic to see happen real time. Back to that, cyber wolfpack analogy. I think that we're going to mob up on these guys pretty heavily in the coming years, and it's going to be fun to watch.
Yeah, one more data point I want to hit on here. Just go leaning into the data here. A big data episode is Strategy's average trading volume. I think as of today, and I have it here on the strategy tracker actually. As of today, Strategy traded $7.3 billion of shares. It's the 9th largest publicly traded equity in the market. They were ranked 88th largest equity in the market. This is a staggering statistic, right? Like since October 30th, Strategy hasn't traded lower than the 15th top publicly traded equity since October 30th, which is just a staggering statistic. And I just want to put this in perspective, right? MetaPlanet was the most actively traded stock out of 12,000 on the OTC markets, which is awesome. These big BTC treasury companies are floating to the top, 388 million in volume across 28,000 trades. So you put this into perspective. It's like 388 million in volume relative to 7 billion 7.5 billion that happened on strategy today. So it's just interesting to compare. And then that relativity relative to its market cap, MetaPlanet is higher over the last day, 388 million relative to a $4 billion market cap. That percentage is around 9-ish%, but that's just on the last day. So probably trading somewhere near the average trading volume of market cap. Why is it important? That's important because it's liquidity. This is a representation of liquidity and how deep, how liquid these equities are. And I think if you're trading significant volumes of stock or options or whatever that may be, liquidity is important to have the ability to go in and out and move quickly within trades. What's up, Ben?
What's going on, guys? It's hard to be anything but pumped today, huh? We just can't get over 111, but we're going to get there. This thing's coiling hard. People are ready. I'm ready. But what you were just talking about with the liquidity, I think what we're starting to see, and we're going to see it really loud on X, is the difference between an institutional grade investment vehicle, where institutions can execute their trades at the size and scale and speed that they want to, versus the rotation of capital that's probably going to happen largely in the retail market for people that are chasing the higher returns, right? The speculators. So you're going to start seeing capital rotate throughout the market. And you're seeing that right now for sure with MetaPlanet. I mean, the squeeze is amazing. I love to see this. And I'm really hoping that Dylan and Simon capitalize on this, because this is one of those rare events that you get where you've got the capability to really rocket yourself up the leaderboard. I mean, I put out a post earlier saying I think it was going to take like 650 million in capital raise to get them into the top 5 publicly traded equities in terms of Bitcoin holdings, which is incredible. And so you'd almost be negligent not to take advantage of this here at some point. And I know there's nuance to it, and the Japanese markets are strange, but the behind the scenes, the private placements, the calls that are going to be happening, the ability to, issue these in blocks through, some of the brokerages or directly to some of these funds that are short is probably going to happen, but they've got all the leverage right now on the terms to make that happen. So it probably comes in some way where they do like a really tight VWAP from a pricing perspective. Maybe it's like a 5-day VWAP, which keeps the price they're issuing these warrants at to all these companies at a really close level to the market price, so that these guys aren't getting favorable conditions. But regardless, I just can't imagine that they don't take advantage of this. But you're going to see this quite a bit. I mean, Japan's going to be really unique because that's just a unique market in the way that they operate and the way that they shut down an equity for an entire day when their circuit breaker hits. But you're going to see rotation from all these new entrants into the market, because retail investors have started to figure out that there's this period at the beginning of this where you've got just massive ramp up in Bitcoin yield. And when you get into these really early, you've got the ability to have significantly outsized returns. And because strategies reach such scale, it's not going to be the lightning fast mover that like a MetaPlanet getting squeezed is going to be anymore. You're still going to have those moves. I have no doubt about that. I have zero loss in my thesis around MicroStrategy. I think it's still going to be a very great play. But you're dealing with a different type of trading instrument now because it is such a deep market. And some of these other companies are still trading really thin, so it doesn't take very much capital to move those equities around. So you're going to see the rotation, but you're also going to see people get burned a lot. And I think that's something that this audience in particular needs to be very, very curious about when you start watching all these new companies launch. Is you're going to have to start getting up to speed on the nuance of all of these different deal structures, because it's complex and they're coming fast and there's more coming. I mean, this market is just exploding right now. And so you're going to have to start getting up to speed on things like lockup periods and all this other stuff, where if you're chasing one of those pumps and you get in at the wrong time, you've got the chance to get burned. So I love that this market's evolving so fast, because this is kind of what we used to always talk about happening over the next 3 to 5 years. And now it's happening in like 3 months. There's just so many companies that are coming out and entering the space and giving people a different flavor. And ultimately, I think you see the Bitcoin treasury market segment much the way you see a lot of the other equities, where you're going to have what we'll consider, the Bitcoin value plays, which is ultimately going to be strategy at their scale, and probably a couple others that really achieve scale. And those are the ones where institutions can play and trade and do all the things they want to do. And then you're going to have these growth and hyper growth. And so they're going to graduate up the ranks as they build that Bitcoin treasury. And it's going to make really unique investment opportunities for people to find different ways to structure their portfolios based on whatever their risk preferences are in this space. So it's evolving incredibly fast, and it's just going to be so exciting for the next year. I think that this space is just going to continue to explode. But I do want to see more companies come out and just announce that they're just adopting Bitcoin treasuries, not going out and doing the capital markets play. I think that there's going to be a segmentation of the companies that can actually pull off raising money in the capital markets. And ultimately, I do think that you're going to find that operating companies are important to that. I know right now the sentiment is it isn't.
Yeah.
They can just go use the capital markets and issue equity and they'll be able to run it. That's fine in a bull market. In a bear market, you need a stabilizing factor, I think. So I think we're going to see some segmentation here, and over time, you're going to see different performance between companies that do have operating companies and ones that are just, pure shells trying to raise using the capital markets. But there's a flavor for everybody now, so you get to pick your sandbox that you're going to play in, and there's never been a better time to be an investor in this space.
Yeah, I think that to Ben's point, what we could see is a Bitcoin equity season, not alt season. And what will end up happening, and again, I don't want to belabor this point too much, but while some of these companies will get over their skis and they will blow up, and I don't mean the company will go down, I mean their Bitcoin treasury plan will go down and they'll have to pivot. I still think that bodes well for Bitcoin overall, because that's a different kind of sell pressure, a different kind of market dynamic that we saw in past cycles where you have like alt season, right? Where you have massive levels of running up, and then you have these, shit coins doing 15, 20, 30 X's and then exploding when everyone takes profits. Being these Bitcoin equity plays, these leveraged Bitcoin equity plays, these Bitcoin treasury plays, the one benefit that I think we have, and guys, check my logic on this if I'm wrong, is that traditional companies are not going to be as violent leaving the market. It's going to have to be a staggered exit if they have to move away from a Bitcoin treasury. I think they're not going to just dump everything all at once without warning and then move on, leave everyone bank holding. I don't think they would do that as readily as a VC that's running an altcoin pump and dump scam, right? So the dynamics will still exist to some degree. People are going to get blown up. People are going to get over their skis. But even with that, I think this is still good for the overall thesis of Bitcoin and the overall thesis of Bitcoin treasuries, because the companies that survive, the ones that end up surviving like a downturn or potential downturn or some turmoil like a strategy, I think are going to be seen as very, very solid plays in years to come. And that'll give them a lot of staying power.
I think some of these companies are just going to do this backwards, where they're going to start the treasury strategy right away because the capital's available to them to get out and start achieving scale. And then they'll look at acquiring a company to build that operating side of the business later. Yeah. So that's my hunch at what's going to happen with a lot of these. Some of them won't. Some will just try to operate them as these basically, holding companies that have access to the capital markets. But I do think that you'll see some that achieve scale first in the treasury side, kind of doing it backwards. And then they'll go and look for operating companies that they can acquire and roll into that. So there's going to be a lot of flavors of this. And, these banks are creative and people are really thinking very differently about how to execute this and how to get into this market, because they see Bitcoin now as an inevitability, right? It's coming. You keep seeing all the cracks in the traditional financial system getting wider, getting louder. People are starting to notice. You're seeing everything happening with the Japan bonds. You're seeing the impact on the US rates here. I mean, people are awake now, and they're realizing that there's probably a very significant need to begin to participate in the only decentralized store value asset that's out there that's at any scale. And that's why I do want to see a lot of these companies just start treasuries as well. This whole using the capital markets is amazing, but I think that there's probably going to be limited capacity in the markets where you might be able to get, 50 to 100 of these that are doing it really well, or at least doing it at some level of scale. But if you want to get to 10, 15, 20% of all publicly traded companies with Bitcoin on the balance sheet, you've got to start championing the other side as well. And so I would love to see some more companies just come out and just start converting their own treasury holdings. Not that they have to go and actively raise capital around it, because I think just converting the reserves you have on your balance sheet is going to be a competitive advantage on its own relative to your peer group.
Right.
So if there's going to be consolidation in the market, if you play this out over 10 years and one company out of a 5-company peer group puts Bitcoin on the balance sheet, holds all their cash reserves in Bitcoin, Bitcoin continues to compound at 20, 30% a year. After 10 years, one of those companies is significantly better capitalized than the others, and you might be the one to consolidate your industry and really cement yourself in that spot. So I think there's a competitive advantage just to acquiring Bitcoin. We get excited about the high octane version of the Bitcoin treasury, and I love it. It's what I spend all day on. But there's a lot of space for just more
Tons.
traditional companies that adopt Bitcoin as a treasury reserve asset. And I'm pretty pumped to start seeing those.
Yeah, absolutely. And if the market starts to adjust and reprice here, I'm thinking about, maybe a year or two down the road. And let's say there's a bear market, but for everything, like stocks go down and Bitcoin goes down, you may see a situation where a company may want to sell their Bitcoin to pick up an operating company that's got cash. Maybe the cash company is trading at a discount to its cash, and you're able to convert it into Bitcoin and get the operating company on top of it. Yeah, I think the future, the evolution of that is going to be really exciting to watch, right? Like so many eyes are on this MetaPlanet thing right now, which is it's incredible. It's amazing what's happening. It's like I said earlier, it's like you get the butterflies in your stomach. I'm probably going to have a hard time sleeping tonight watching what's going on. But at the same time, there's so many other things that are going to happen in the next 10 years, right? Like it's going to be like, if you want to be around this, I mean, there hasn't been a better time to be, close to this stuff.
Oh, who's having a better time than Dylan right now? Right.
The guy's balling. I love the meme where he's like takes the hat off and then like puts the hat back.
He puts it on, walks out the door. I mean, when you're in this position, like this is what you dream of if you're running one of these treasuries.
Yeah.
Right. Everybody's very aware that there's an arb play between the market value and the book value of the company, right? I mean, that's been highlighted over and over through strategy in the ATM. So when you get these chances where you've just got these series of events that line up and result in this crazy squeeze that starts to happen, and you build this, relative to all the peers in the treasury space, you build this massively outsized premium in your market cap versus the book value. I mean, you got to be downright giddy because they're going to be double, triple the size of the company or of the treasury in relatively short order here, if any of these guys want to get out. And they're going to want to get out. I mean, there's no doubt that they've got a big cohort of people that are pinned at the moment. And that's a real problem if you're a fund. And if you want to save face and get out of this, you're going to start making calls and being friendly and wanting to, partner here and figure something out to get out of it. So it's just such a unique space. But I think what they've really highlighted is that there is a source of alpha here in the foreign jurisdictions, right? Outside of the US, looking at the foreign markets and finding the nuances in these markets and looking for weakness in particular markets and areas to capitalize on inefficiencies and things like the tax codes, like what they have in Japan. So I think it's really cool that we're starting to see announcements pretty much every week of a new market getting a new version of an LB or a treasury company. And there's going to be nuances in a lot of those markets. And it just means that we're all going to have to keep getting smart on what's happening in all these different countries, because we're going to get another crash course in their bond markets and the way their currency operates and their tax regulations and their rules. And that's how you're going to find the opportunities, because most people don't want to do the work to figure that out and to find the nuance and to find where there's an edge. But it's going to be out there, and there's going to be more than one of these markets that's going to have some unique setups like Japan has.
I have not learned as much as I have in I've learned more in the last couple of days than most of my financial education, right? You're sitting on AI. I'm like, what is this? What is this? And it's cranking it out. I'm reading as fast as I can, scrolling like, all right, next question. What is this? Man, holy moly. There's so many things going on, and access to information is faster than it's ever been. Everybody's getting like exponentially smarter. If you're not using AI, you're totally screwed, falling behind. I can't believe people aren't paying attention to this stuff. It's crazy.
It's probably going to be a knowledge retention issue that starts popping up out of this. I mean, you use those AI tools all day, and man, are they powerful, and those deep research functions, if you've got a specific topic that you want to get smart on, is amazing. But the problem is you can almost digest too much data at one time, right? And so you're quick to read it and move on to the next thing, and then you got to be able to connect that picture later. So it's going to be tough, because it is fun to go down all the different rabbit holes, but sometimes you do have to specialize in a certain area to make sure that you can truly be an expert and see differences that other people can't see. And markets are going to be no different.
Yeah.
I just had a client let go of 6 people today because of AI tools.
Yeah.
6 people. Yeah.
6.
Wow. Dan, speaking of specialization, I was going to kick it over to you, because I know you put together some stuff. You were thinking about the market, the landscape. You're looking at similar. You're looking at other equities. You're trying to put all this data together. What are you thinking about? What are you looking into these days? Oh, you're on mute.
Now it's a corporate meeting.
Yeah.
This is what happens.
Still on mute. Still on.
He might have lost his mic or something.
Yeah, that's all right. Maybe he'll come back. You there?
Yeah, I'm off.
I can hear you now.
Now we can hear you. You're good now.
Yeah, sure. I'll share my screen, and I just have a very broad overview of the different companies that we're looking at, and then we can talk Strife and Strike ATM. I think, Strike ATM. I think that's kind of the most interesting topic in terms of strategy.
Sharing the wrong screen.
Yeah, right here. Sorry guys, I'm a novice over here. Window.
There we go.
That will.
Now we see each other.
So that's the whole window, and then you should be able to.
All right. While he's doing that, Dan, while you get that figured out, I'll jump into leverage update. MSTR leverage update. We've shown this past couple of weeks. This is as of 5/21. MSTR holds 576,000 Bitcoin on balance sheet. Bitcoin price at 110,000. You've got assets of 63 billion. This is up from last week. I think it was like 57 billion. Debt held on balance sheet, 8.2 billion. Preferred stock, 1.7. Net capital held on balance sheet is $53 billion. So if you were to put just their net capital next to the market cap of all the publicly traded companies in the market, MSTR would be ranked about 180th just by net capital if you put it next to the market cap, which is just incredible financial strength. This is one of the strongest net balance sheets on the entire planet. They've got a leverage ratio of 13%. The Bitcoin price would need to go down to 14,200 for the assets to be worth less than the liabilities. On a pro forma basis, if you back out the debt that's currently trading in the market or in the money, it's about $3 billion that's trading in the money. The leverage ratio would be about 8%, and the Bitcoin price needed for the assets to be less than the debt on the balance sheet would need to be about 8,600. Again, everybody and their mother would be selling everything and in order to buy more Bitcoin if we went back down to 8,000. So a very, very strong position that Strategy's in from a financial perspective, and leaning into that. Dan, you ready? Now you're on mute again.
He lost his mic again. Did you guys talk at all before I got on about the debt ladder that they've got out with the convertible bonds with Strategy, and now that a ton of them are already convertible, and now they're super deep in the money where they're effectively equity, and you might be getting back to the point where it's time to be on conversion watch?
Yeah, I haven't hit on it, but that's effectively what I'm getting at here. And maybe I'll hop over to the strategy to the debt page. And I did bring this up a little bit earlier. So I had a tweet about it earlier. So you've got about 3 billion that's currently trading in the money, Ben, to your point here. And I think you can sort it by conversion price.
Yeah, you've got about 4 of them right now that are effectively equity, right? Where there's really no more gamma trading right now. And if that happens, I think you could probably see those first 4. And I can't, what do you got? 1.8 billion, 2.6, 3.3 billion.
Yeah, 3.2. Yep.
That would roll off. And that would open up for some really big converts to come, because I do think converts are coming. I know a lot of people think that they're only ever going to use the ATM again, but I don't believe that at all. they're not that far out of the 60-day window from the last one that they issued. And so I think now when volatility is coming back into the Bitcoin market again, it's going to become very advantageous for them to start rebuilding that ladder again. And you're going to see a lot of these either convert, or because they're so deep in the money, they'll just start issuing new ones because they're under levered anyways. So they've probably got capacity to do 5-6 billion pretty quickly if they decide to. And that'll start reigniting that volatility again.
And the
strategy.
bewilderment.
So I don't
Bewilderment
think
will be
they're-
off to the races.
I don't think they're done pulling on this lever, but I just think that as you get more tools available to you, like keep in mind, strategy is the only one with as many tools available as they have and at the scale that they have. So while they're working on scaling up STRK, clearly that's one of the primary tools they're going to use in the future, given they allocated 21 billion directly to that. It's going to take some time. So in the meantime, they're going to have to re-lever up in other ways. And I still think that they're going to need to juice the leverage with the convertible bonds to right size the leverage ratio while they continue to build the liquidity on STRK. And the ATM is probably going to keep being used while they're not issuing the convertible bonds. But I'm expecting these to come fairly soon as long as the market conditions remain right. And it's going to let people see that now that they're achieving the scale, they're going to really focus on making sure they execute these at the most opportune times when they can get the best terms, when they're getting the highest premiums, the lowest coupons, and they're going to be very strategic about how they deploy these because this is longer term debt. And so they want to make sure that when they get it, they're getting it during the perfect market conditions. And those are starting to show up now, right? This move in Bitcoin is going to be really important for getting more convertible bonds out if they want to get the right type of pricing. So I think we're hitting that window now where you're going to start seeing this tool be used again. It's kind of a matter of when and how long this volatility in Bitcoin remains.
So you hit on two things. There's a 60-day window generally from your prior convertible bond. I think that you can't issue another one within 60 days. So the last one that they issued was February 21st, 2025. There are some exceptions. I think they issued two back-to-back in March of 24. So there are some exceptions to that.
Yeah, you have to get a waiver if you're going to do that. So it is possible to issue them in succession, but you probably have to have like joint buyers that are buying those bonds where they're okay with you issuing two right in a row. Like you might be a buyer in each of the bonds if you want to stack out your maturities or whatever you're doing. So, but yeah, so they can get a waiver and issue two in close succession, but the standard is 60 days after the last one before they're allowed to go issue another one.
Yep. And the two most recent, the biggest ones. So you got a 5 billion that's trading now, and as the price is around this $400 range, you're now entering this high gamma zone where a lot of the arb trading is happening. When the stock was really depressed on these specific convertible bonds, there was less arb trading happening because it was the bond was trading as pretty much a bond. And now you're getting into this period where it's like bond and equity. So you're seeing a lot of trading going back and forth between the arb. All right, Dan, you ready?
Yep.
All right.
Well, we're talking about strike, so we can talk just strike weekly volume if that's interesting for people.
Let's hit it. Yeah, I love it.
So strike volume, I've denominated this in dollars as opposed to shares. It's just easier to kind of look at. And these are the Mondays of each of the weeks since Strike ATM started trading. And you can see the Strike ATM usage here, and those should be in dollars. I apologize.
Can you throw some commas in there? Yeah, there you go.
Yep, those should be in dollars. And this is a percentage of the weekly volume. So because the strike is a function of the liquidation preference, interest rates, the future, the creditworthiness of the strategies, capital stack, you can issue strike at a really high percentage of the total traded volume without diluting or putting a lot of downward pressure on the STRK equity price. We've seen STRK just go up a ton in value over the past few weeks, and you can see there's been 30, 35, 43% of the traded volume issued in STRK ATM. So what that shows you is strategy is doing everything they can to get this out the door as quick as possible, and I think the demand continues to creep up. With the most recent ATM being 60 million, which is about 10% of last week's Class A ATM. So I think it's quite good for the long-term prospects of collateralizing the balance sheet and using a preferred ATM to acquire BTC per share for the Class A holders, but it's just taking time. It's not a super overnight process, unfortunately.
So is that volume up to date? Is it as of today, the 21st or May 19th?
This one here, this
Yeah.
May 19th is as of today. Yeah.
That's
So
as
that's
of today.
3 trading days: Monday, Tuesday, Wednesday.
Got it.
Then obviously we haven't seen the ATM this week, so unfortunately we don't. So we're on track to do more volume than last week, depending on how we finish Thursday and Friday.
Okay, let's do a quick primer on Strike. Right? What is Strike? Strike is a perpetual preferred stock, perpetual convertible preferred stock. Strike itself. Here, let's pop this down. Perpetual preferred convertible stock. Convertible perpetual preferred stock. Perpetual convertible preferred stock. It's one of those. It's in that order. And what that means is preferred stock, it sits higher on the capital stack in liquidation preference. So in the event of a bankruptcy, the holders of debt instruments get paid out first before common stockholders get paid out. So this is a preferred instrument. So it shifts higher up on the capital stack, which reduces the risk of holding that specific instrument. Strike itself pays an $8 per share dividend. So at a price of $100, it's paying an 8% annual yield. As the price of the Strike, moves around, that relative yield also moves around. And the interesting thing about Strike is 10 shares of Strike can convert into 1 share of MSTR. So you've got multiple components that can move the underlying price of Strike. You can have interest rates move the underlying price of Strike, where if interest rates drop, this product looks extremely more attractive, so the price would go up. Vice versa, if interest rates rise, the relative interest rate on this would look less attractive, so the price would fall, similar to like a bond. Now, the really interesting component is it's got this convertibility, which has the ability to move with the price of the underlying equity. So as the price of the underlying equity goes up, the conversion value, the conversion premium goes up. So the underlying price of Strike would go up too. So you get this free call option. You get, and as of today, with the price trading at $100, like right at par, you get 8% annual yield and effectively a free call option. Dan and I explored this about 2 weeks ago. We've got a piece of content out, and we'll maybe reshare it after this. So if you're interested, we kind of walk through all of the dynamics. So that's the baseline there. And maybe we'll jump into this because I calculated and went and compared Strike to a piece of real estate. And I'll share my screen. I'll walk through analysis I did just out of curiosity. Maybe I'll zoom in a little bit. Can you guys see this? Can you guys see
it
this?
Is okay? Interesting when you think about Strike, if you kind of take the price of it and you back out the component that's allocated to common stock. So 10% of a share of strategy stock. So call it $40 right now. So you can look at it and the yield on the cash actually looks a lot better because you're essentially getting an $8 dividend on, call it $60 value, because the other $40 is actual shares of common stock. So it's a really interesting product when you break down the way that it works. And I think that's why they're so confident that it's going to be so popular. And you're seeing it now because clearly there's demand for it that pushed it up over 100. And you can be sure they're using the ATM. But as we've talked about before, this is one of those where it's a self-healing product, because if you use the ATM and it does drive it down, the yield starts to rise and people start coming in and the demand raises and it comes back up to the market value. But the other thing is, while it doesn't have really high liquidity, a lot of that ATM is probably being issued through block trades, which is essentially big buyers that are calling up saying, hey, I want,
50 million, 100 million. I
want 50 million of this. And then they're issuing that in one block trade so that they're not moving the market and they agree on pricing for that block. So that's probably how a lot of the ATMs actually being done on this product as it's scaling and you're growing that liquidity, because you really don't want to be hitting the market too hard with any type of an ATM product. So I would guess that a lot of this is getting traded through blocks at the moment. But it is a really unique product. And I think it's going to take a little bit to get smart on it, on just how good it is, particularly if you want protected downside. And being higher in the capital structure, which is really important to some of these really big investors or people that are trying to, diversify the risk profile in their portfolio. It's a really cool product. So I think that we're going to see this scale pretty quickly here, because it's clear that with the pricing and the way that it's been moving, people are catching on and they're moving a lot of these shares.
Exactly. And I'm about to rip into it on why to buy strike over real estate. So over here on the left-hand side, this is a real estate calculation, first of all, and then over here under the orange, this is the strike calculation. So on first blush, when you're just looking at this without even looking at the numbers, real estate on the left-hand side, complicated, a lot of things going on. Strike in the middle, not complicated, very simple. And that will play out here. So I put out a $500,000 home price and assumed you put down a 20% down payment. So you've got a $100,000 down payment and you took on leverage on this property. So you have a loan of $400,000 and let's just say an interest rate of 7%, which is the current interest rate. So you've got all of your monthly expenses here: principal and interest, property tax, maintenance, repairs, utilities, vacancy allowance, property management, insurance, etc. So you've got monthly expenses of $4,400. Taking the 1% income rule, assuming you get 1% of revenue from this property, you get $5,000 in the door a month. And we'll come back to this vacancy in a minute. So on the year, on a net basis, you're going to yield $7,000 a year. That gets taxed at your ordinary income tax rate. So your yearly net maybe $4,500. So you've got a down payment of $100,000. Your cash on cash return is that net $4,500 relative to the down payment, so about 4.6%. Compare that to strike, right? Same principle. You got a $100,000 principal. Current price is $100. Yield is $8 per share, so you're getting 8% here. Expenses are 0. Annual yield is $8,000. Your tax, assuming this is a qualified dividend, which I think all data that I've reviewed so far is that this is going to qualify as a qualified dividend. So you get taxed at a preferable long-term capital gain treatment, which would be 15%, which is a huge benefit. Your net, this is not financial advice. I don't think that has been confirmed. I don't think the dividend has been paid yet. We will see if it will be qualified. So on a net basis, that'd be $6,800. And yes, somebody said I'm leaving out the tax write-off, but we'll get back to that. And net cash on cash return is 6.8%. Now, I want to look at this on a 10-year basis. Like, okay, there's multiple things playing out here, right? You got two different instruments. You got strike and you got real estate. And you got to think about compound annual growth rate. So strike, I assumed, let's assume strike has a compound annual growth rate of 30. Strike will have a compound annual growth rate very similar to MSTR once the price of MSTR is over 1,000. So it may have a similar upside to Bitcoin, nearly Bitcoin upside, maybe even potentially more. So you think about a compound annual growth rate of 30 may be very realistic. It may be low. Principal, $100,000, yield 8%. And assuming on the real estate, you've got a 3.5% compound annual growth rate, $100,000 principal, your yield being 5%, and your rental rate increase every year of 10%. Just got to make some base assumptions so we walk through this. So if you look at this on a 10-year performance basis, your principal, if you held it in strike, grows from $100,000 to $1.06 million with a 30% compound annual growth rate, and you get a yield of $68,000 over that same time horizon. So your total at the end of year 10 is $1.1 million. Now, under these same assumptions for the real estate performance, you've got the home prices compounding at 3.5% annually. Your loan balance is going down at an increasing rate. So your equity is growing, and you've got the annual yield that you get along the way. And so the total in this circumstance is $697,000. Obviously, a lot of assumptions are going into this. You're assuming, everything on the left-hand side with real estate and all of the expenses, et cetera. Now, the important thing to take into consideration is all of the risks associated with each of these. So on strike, when you're looking at strike, what are the risks and how do you quantify and value the risks? You've got collateral risk, volatility risk, custodian risk, jurisdictional risk, copycat risk, and mNAV deterioration. You've got all of these potential risks that you've got to take into consideration, but they're all digital, right? These are all real digital risks. And then you think about the risks of owning the real estate, and you look at vacancy, dollar debasement, catastrophes, insurance rate increases, interest rate risk, liquidity risk, and population shift, right? Like if people just move out, like you don't get paid. So that's why I put this other highlighted column in here. This is extended vacancy months. So if you think you've got just 2 months of vacancy every year, all of a sudden you're starting to lose $30,000 on this property because you're from a yield perspective, because you have vacancy risk. Conversely, if your insurance goes up, it doubles, goes to 3, your house burns down, it goes up by 4x or 5x, that cuts into the yield. All of these things need to be taken into consideration. So when you're looking at the relativities, maybe we'll put this back to 150. When you're looking at the relativities, even if you drop the CAGR of Strike to 20, I think a lot of people would say that Strike probably has like the next 10 years, Strike is probably going to have a compound annual growth rate greater than 20 because it's following MSTR pretty closely, unless you're bearish on MSTR, like the recent crowd. That would be a situation where it maybe made better sense to hold the real estate. But you've got all of these other risks to take into consideration. So you think about like risk adjusted yield of each of these different products and how many units of risk do I want to take into consideration relative to the principal. Okay, pause there. Any questions?
No, you also got to put the time into the real estate. Right?
Time,
I mean,
yeah.
The amount of actual man hours that it's going to take to manage all of that. I mean, being able to free up your time is a real gift. And now being able to have all these unique products that provide people with really unique opportunities to tailor a portfolio is going to be huge for a lot of people that don't want to spend the time managing portfolios of real estate and chasing around tenants and doing repairs on damage and all the things that come along with it. Because, while the appreciation's been really good historically, and it used to be kind of that, I viewed it as a really good investment for a lot of people, particularly in the early days, because it was kind of a forced savings account because it's not all that liquid. So that appreciation could build up. You're not just going to offload it, and it's not something that you can just trade in and out of, right? There's some friction there to getting out of there and to accessing that liquidity. But now that you've got opportunities here for cash flowing assets where you can very clearly define what your risks are and you can monitor them in real time, because with a product like Strike where you stand in the capital structure, how over collateralized they are at any given point in time. You can monitor that and you can make adjustments if and when things do change. And so you've got the ultimate in flexibility, and you get to be hands off. So you get your time back. And I think that's a very underrated benefit to a lot of these products when you compare it to something like real estate that requires a significant amount of time and effort to do right and to do well. So it's, all these things are being enabled by Bitcoin and the unique characteristics that Bitcoin brings into the markets. And, when you found out that this was strategy using AI tools to create really cool products, you can just imagine what's going to come next, because there's going to be more companies offering different flavors of these types of products. And you're going to have different collateralization profiles and different risk returns, so you can really customize. And if you're looking to build that cash flow, which a lot of people are, right, it's clearly a very hot topic because MSTY really exploded in popularity, which told you that people are looking for income. IMST is another one. We'll find out what their dividend looks like tomorrow. And so you'll see how that one's performing. And then you've got these, which are going to be really stable, over collateralized. You get to watch them. It's very underrated, in my opinion.
It's very liquid. Strike is not going to have a leaky roof, and Strike is also not going to have property taxes that go up in perpetuity. So there's all kinds of ways to look at this. To your point,
you could simplify it into just how many ways can get screwed, right?
Yeah.
Like, okay, in real estate, I could get screwed way more ways probably than you could get screwed with Strike, and it's not liquid, right? I mean, even if you needed to get out of something, it's like, okay, well, now I got to go get an inspection. I got to pay costs to sell the property. I've got to, replace a window. I've got to do all this stuff to make it, put the lipstick on a pig. And it turns out actually Amazon is making all of their people go back to work. So nobody actually wants to live in my area anymore. Nobody's moving back out to the burbs. Like you've got all of these potential
all kinds of ways it can go wrong on you.
You just get screwed everywhere, everywhere.
Or you can just hold strike, get the money, stay liquid, and not financial advice. But
which is great. I feel like this is great for humanity, right? Like there's unaffordability everywhere, rampant, because so much capital is just flooded into real estate as a store of value, and they're not actually using it. And it really, really strips out the store of value nature of real estate over time. It'll take a century, maybe, but it will really boil down to like the utility value. Maybe you don't need that third or fourth home because, Bitcoin or Bitcoin related equities or perpetual preferred stock is a better place to hold that into perpetuity than, that third or fourth house that you may have had just to store $5 million or whatever.
But yeah, and this dynamic, like with the perpetual preferred stock, you're really picking between perpetual preferred stock and perpetual incurred costs with real estate. And what I mean by that is, back to the property tax example, you're going to have property tax in perpetuity, and it's only going to go up over time, right? So does someone make the decision, to your point, that everyone's been using real estate as kind of like a savings account essentially for the last 50, 60, probably even longer than that, 50 years. If you remove that dynamic and now you have other vehicles where people can actually put capital into, get return on investment, get their appreciation without the costs that exist in perpetuity with real estate, maintenance costs, property taxes, the list goes on and on that we just talked through. I think it does change the dynamic quite a lot when it comes to how people view their money and their relationship with money and the ways that they can live into the future. Real estate no longer becomes the default savings mechanism. These passive Bitcoin investments do.
Right. That's exactly it. And you've got the new efficient frontier, right? Shall we shift gears? I wanted to talk on S&P 500 potential inclusion earnings Q2. Maybe I'll bring my screen back up because this is a big deal. First of all, I'm gonna look at the scale of Bitcoin treasury companies because I think this is important too. This represents all Bitcoin treasury companies, or at least the next 10. So this is the top 11 Bitcoin treasury companies. You got MSTR over on the left-hand side. Holds 576,230 Bitcoin. Each square represents 1,000 Bitcoin. The representation over on the right-hand side, this is the next 10 closest companies holding 171,000 Bitcoin combined. So this is just a visual representation of, these are all of the companies. This is how much Bitcoin they hold. Just to show a relative scale here of the moat, right? Like this is an enormous moat, and the number of companies with the cash or the capital to potentially capture MSTR moving forward is very, very limited. I think there might be one company in the world that's got enough net cash on balance sheet to potentially buy as much Bitcoin as MSTR holds. Whereas you look at all of these other companies, and there are, hundreds, if not thousands, with net cash on balance sheet that could buy, 2,000, 3,000, 7,000 Bitcoin in, a couple purchases. Now let's get into earnings estimate. So this is Q2 MSTR earnings analysis pro forma. So Bitcoin price as of today, 110,000. Bitcoin price at close of Q2 is 82,000. So the Bitcoin held from Q1, they're looking at about $14.5 billion gain on the Bitcoin held from Q1. They also purchased more Bitcoin here in Q2, about 48,000 Bitcoin. That the purchases already made in Q2 are already in a profit position of $736 million. So the total gain held on balance sheet is total gain for Q2 on estimated basis be about 15.2 billion. The net loss in Q1, or the net loss of the last 4 quarters, was $5.3 billion. So they would clear the hurdle for positive earnings over the last 4 quarters by about 9.8, almost $10 billion, which would then qualify them for the S&P 500. Again, they have never qualified for the S&P 500 they've always, over the last 300 days, they've qualified from a market cap perspective, but they haven't qualified from this earning perspective. And I think this will, at the close of Q2, which is coming very soon, end of June 30, they will report an earnings, depends on what the price of Bitcoin is at the end of June. They will have an earnings report hit in August. And I think that will result in significant confusion in the market, where the market's trying to reprice what's going on, trying to put this relative to the other companies in the equity market. And yeah, if you look at the S&P 500 has an average PE ratio of 26, QQQ average PE ratio of 35, Max 7 average PE ratio of 31. This is an average. So there are some with significantly higher PE ratios. If you to hold the PE ratios constant in that perspective, you're looking at a price significantly higher than where we are. So from a value perspective, comparing this to the rest of the market, there's significant balance sheet strength, significant growth on the balance sheet. Bitcoin continues to be added to the balance sheet. This is an operating company. It's not a closed-end fund. And yeah, I think we're going higher from here. Dan, Adrian, Ben, any points to add?
I'm over here scrolling down the S&P 500 list to find out where that gain, just the gain alone, would put them on the list.
It's top five. It's top five.
No. Just in terms of like the market cap of companies in the S&P 500.
Gain. Yeah.
What was the gain there that you had?
15 billion.
Well, you had 9 or so, or was that the net?
9 was the net over the last 4 quarters. So Q2 net income of 15.2 billion.
So 15.2 would put them at 421.
So their net income potentially in Q2 would qualify for the S&P 500.
Which is pretty crazy. And then even the 9.7 or whatever it was is like 477.
Yeah. Wow.
So pretty crazy, right? I mean, these numbers, we get so numb to them because we look at this stuff all day long that you don't realize how baffling some of these gains are. Like the size of the capital that's moving around here is just absolutely incredible.
It's a steamroller the size of the Empire State Building, right? Like it's going to move a little bit slower, but once that thing gets cooking, like watch out, right? Like this is taking over everything. I also did some interesting analysis on comps in the S&P 500, and I mean you can't see shit here, but basically there's 2 companies with a market cap over. There's 2 companies with a market cap over $100 billion. Right. There's 2 companies with a market cap over $100 billion that are not in the S&P 500. It's AppLovin and MSTR. And so that just goes to show you every other company that has above $100 billion market cap has the passive flows of the S&P 500. That's why they're up there. That's why they're $100 billion companies. And now it's really fascinating when you see the relativity of these 2 companies that aren't even included yet. There's probably some front running going. Obviously, retail is front running this, but I think there's mass confusion in the market, and I think it's going to be hard for the S&P 500 committee, particularly if Bitcoin continues to rip and these numbers get astronomically large. I think it's going to be hard for the S&P committee to exclude them from the S&P 500, and they probably will get excluded first go around. But I think the bewilderment will take a hold, and Larry Fink will give a call, and they'll eventually get included. Go ahead.
Yeah, I'm inclined to agree. And also coming back to, like, if we just go back to the conversation we had earlier in the call about market sentiment, I think people are really grossly underestimating just how much this will do for sentiment once they are included in the S&P 500. Just imagine the dynamics that come into play when a levered Bitcoin play essentially, I don't want to say forces their way into the S&P 500, but it kind of takes it by storm and goes from a $1 billion company to an over $100 billion company. And now they're in the S&P 500. Now they're getting additional passive flows. I think market perception and market sentiment are going to start take up in that kind of a dynamic is what my guess is with front running and then after inclusion.
Yeah. I do also see a lot of comments asking, is this just balance sheet appreciation that doesn't hit the income statement? The way that the accounting rules work now is that change in the fair market value does hit the income statement. So this will be reported through the income statement, which is why we're looking at it as earnings, because that's how it'll be reflected.
Right. This is FASB fair value accounting, which they adopted for the first time in Q1. Just the way that the price of Bitcoin fell, I think it ended Q4 at 94,000, ended Q1 at 84,000. So it was just another extended quarter of bewilderment of people, right? That's where we saw 82,000% miss on earnings estimate. And it can be the complete opposite, but to the positive degree for the first time in the last 5 years. And, there's been so much negative press every time, an earnings has come out. It's just been Seeking Alpha, Forbes, negative press. And it's so funny. You go look through the articles, there's no mention of FASB fair value accounting. They look at the software business, don't even mention Bitcoin, don't even understand what's going on. And this is a really significant event. I think this is the biggest story of 2025. I mean, MetaPlanet is making a run for the biggest story of 2025. If they kill the Japanese bond market and everything blows up because of MetaPlanet, I mean, that's an enormous story right there in itself. But if they get included in the S&P 500, that is an enormous story. The largest Bitcoin treasury on the planet that holds $60 billion of Bitcoin, probably to be $100 billion at that point, is added to the S&P 500. Credit quality goes up. Access to capital goes up. ATM ability goes up because you have passive flows. Everybody and their mother that has a 401k has exposure to S&P 500. And that's passive zombie money that's coming in the door and nobody even knows, right? They don't even know that they hold MicroStrategy, right?
My favorite is that with these earnings, when they have those misses, where they missed earnings by 85,200% or whatever it was, there's no follow-up to figure out why.
No,
right? That's just the headline, and the analysts shrug it off, and they're like, "Well, we were wrong, by a little bit, I guess." 85,000%, and it's going to keep happening for a while. But this is absolutely the story. Whether the story is MicroStrategy or not, the story is definitely Bitcoin treasury companies.
Yeah, for sure.
2025 is undoubtedly the year of the Bitcoin treasury.
Hell
company.
yeah.
And the outperformance, because of the strength that Bitcoin's showing amongst weakness everywhere else in the global markets, is just going to really amplify that message. So anyone who is still asleep at the wheel, that's not paying attention to Bitcoin as an asset class, not paying attention that are participating, that aren't outering Bitcoin for their own personal balance sheet, this is the year that message is going to get deafeningly loud. And people are going to pay attention. And I think that, these new all-time highs that we're seeing is just going to amplify that message and accelerate this thing. Keep in mind that a lot of these buyers that are coming into the market, they're long-only buyers, right? So you've got this structural bid building up underneath Bitcoin that any of these traders or sellers have to compete with now. It takes a lot more sell pressure to exhaust these buyers because now they're bringing in, by the billions of dollars. And you keep seeing more and more and more of these companies coming in and building a bigger and bigger structural bid underneath Bitcoin because they're not all buying at one point in time. It's consistent now. Now you've always got someone in the market raising money, buying Bitcoin with it globally, not just in the US markets. So it's creating this really crazy dynamic out there that's putting such a strong bid on Bitcoin that you just have such a hard time seeing this getting some massive drawdown now because you have so many buyers that are there to absorb it. So
Yeah,
we'll see. Obviously, anything can happen. And if the markets get really thin, volatility can spike for sure. It can become more volatile than less volatile if the trading gets really thin because it's all going to change hands at the margins. But, it's just such a strong bid now that I have a hard time, particularly in the short term, seeing this thing slowing down. I think we're going to have a really awesome summer here. I think it's going to be a ton of fun.
Yeah, I agree. That's what I was talking about earlier. I don't see that 80% drawdown coming in the market with all these different players. I just don't see how it happens in the same way. And Bitcoin also just crossed 111 for a little bit on Coinbase. So I just want to point that out for shits and giggles. But to Ben's point, and with what I was discussing earlier, the players that we have in the market right now are fundamentally different than any other cycle. And with regards to the dynamics that creates, I don't think it creates an event where people are just going to be exiting Bitcoin en masse because they're rotating into something else. Everything that is going on right now whether they rotate from one LBE to another, they're still passive Bitcoin buyers, right? So it's still creating the impetus for upwards buying pressure on Bitcoin itself, regardless of what they rotate into. So everything, kind of like what Soleil was talking about, becomes a cooperative trade. The pressure remains no matter where they go. So that 80% drawdown, I just don't see it. 20, 30, 40, sure. But us going from 200 or 300,000 all the way slamming all the way down to 40 or 50, I just don't see it.
Yeah. Or you exit and you go into Bitcoin, right? Like it's your safe haven.
Exactly. It's still upward pressure.
Yeah,
you're going from one to the next, but it's all Bitcoin.
Yeah, there's no running around between altcoins and trying to follow the energy. I mean, there's some similar type energy going on right now with these Bitcoin treasury companies. And I was talking with Grain a little bit earlier before this, and right, you've got this scenario where people are trading this stuff in their IRAs without incurring taxes. So you basically you've got your capital is in Dubai effectively by being tax advantaged, and you can protect it and make trades in and out. So you've got capital that's moving quickly, and you got a lot of retail that's trading these things and following the energy. It'll just be interesting to see how this all kind of moves around.
Keep in mind that the services are also evolving around Bitcoin.
True.
So when you think about things like lending getting unlocked, and particularly lending at favorable rates where you start creeping down closer to, SOFR +2, SOFR +3 style lending rates. When that happens, people lose their need to sell, because now you can go borrow, not incur the capital gains tax. I mean, that changes the market in a big way, because historically you've had to basically pay loan shark rates to go and borrow against your Bitcoin, and people just didn't want to do that. But because of the style of collateral, how well this works as collateral, and the liquidity, the global liquidity 24/7 in the market, over time, those rates are going to compress in a big way, because it's the best collateral that a bank could be holding, because they're immediately liquid on it. And when that happens and all that friction comes out, and you're not getting gouged on the price, and you're holding an asset that you still think is going to compound at a high rate, you're way more incentivized to borrow against it than sell it. So that's going to take additional sell pressure out of the market. So I just see so many dynamics piling up here around this asset class that it just seems like we're really about to hit that curve where people wake up to how powerful this is. And now they know they can actually utilize the value, right? The messaging isn't, you just have to buy it and die with it and you can never do anything with it. You can use the value now, and it's going to get easier and easier to do without having to get rid of the asset. So it's a powerful dynamic at play. When you add it in with all these institutions that are out acquiring it, they'll also start borrowing against it, so they won't have a need to sell, and they'll still have access to capital if they need it. It's all lining up. I mean, it's looking great.
Yeah, people underestimate the impetus to sell, right? What causes that real drive to sell, and what's the benefit of doing it? If you remove that, that's more upwards pressure. Also, for shits and giggles, we just blew through 111. We're at 111,497 right now. So I think we are entering just a little taste of price discovery. And for people that were calling for 90s, 80s, whatever, I think that's going to have to hold off just a little bit here.
Can we also just acknowledge how this thing's ripping? We're at all-time highs. None of us even seem remotely excited about it. It's just normal. We expected it to be here. You're like, well, of course, it's 111. People are going to wake up at some point. You're just, it's kind of amazing. It's lulled us into sleep where these moves don't even seem all that significant. But for an asset class like Bitcoin to be breaking new all-time highs and entering price discovery again is a really big deal. I mean, this is awesome. So now we just got to get through the curse of next week and make sure that, we don't have the conference dump. So everyone's going to need to ramp the vibes up here so that we can power through next week. And if we're on the other side of that, there's nothing stopping us. If a Bitcoin conference can't stop this price pump, we're in the clear.
That's going to be the real test. I'm really going to be curious to see if the conference curves.
It's amazing how superstitious we get, isn't it?
Yeah. If we're all going to be at the conference looking at our phones and fuck, and it happens again, that
big sigh of relief on Thursday, thank God we made it.
Yeah. But no, I think we might blow through a little bit here and then see where we retrace to is what I'm waiting for. If we can beat the conference curse, though, that's huge. If we come to the end of next week, we only go down just a little bit, and we haven't like dropped back down to like, I don't know, 99 or something, I'll be a very happy person. I might have more vibes then.
There you go. Yeah. If Dylan and Sailor can team up and raise a bunch of capital and just buy all week during the conference, break this curse, we're in business.
Yeah.
Yeah.
It's fun to watch, man. It's really fun to watch. That's all I gotta say. So.
It's wild. I mean, there's gonna be 35,000 people at the Vegas conference. It's gonna be totally crazy. 35,000 Bitcoiners in the same place. Like, I don't know another thing like that, right? I guess.
What if we're at like 120 and we hit like 120 or something like that at the conference?
People are gonna be freaking out. People are gonna be freaking out, dude.
The energy is gonna be out of control. Yeah.
Bitcoiners are going to be swimming in the Bellagio fountain, and it's going to be a mess. You know? The vibes could get too high. You know, people are going to have to rein them back in. But
yeah. If we run up during the conference, I'm just going to have my phone ready for the memories, because it's going to be interesting.
So the search interest
conferences where you're very prepared for announcements to come out. Right.
Yeah.
I won't be surprised to see several announcements come out. So I'm excited for it. I think this is going to be a fun one because we are hitting this curve. So it evolves these conferences, and now they become really big events for anyone who wants to try to make a splash if they're going to launch something. And so you're always excited to see what comes out at these, because you just never know. I mean, some of the announcements are huge, so we'll see.
And everyone's incentivized to hype each other up. All these different companies, that's what we were talking about earlier. This creates so many different dynamics that I think the market is really unprepared for. I really, really do. But sorry, Jeff, go ahead.
Yeah, we've just been cutting Jeff off constantly.
Sorry.
The surge interest for Bitcoin is a third of the peak in 2020 and 2021. So, and it's it's about 40 or 50% of what it was around the election. So I've gotten 0 text messages from anybody I used to work with that knows I quit my job to work in Bitcoin. I've got 0 text messages from family. I've got 0 text messages from friends that all know I work in Bitcoin. I think that's my gauge of kind of how crazy things are getting. I'm trying to not text anybody and do the opposite to them because it's too late. They've got to get there on their own. Crazy stuff.
Awesome.
Just some more stats and data if you guys couldn't get enough. The top 10 ETFs that hold MSTR over on the left-hand side, and then top ETFs that hold Palo Alto Networks over on the right-hand side. Palo Alto Networks, about 6% of the companies held by the S&P 500, just out of the top 10 ETFs. And it's very clear, just in looking at this diagram here, the top 10 ETFs holding MSTR represent 10.3% of the holdings, and whereas Palo Alto Networks holds 13.9%, the top 10 ETFs hold 13.9% of the stock. So I think there's significantly more pressure from like retail and all of these other institutions that are holding MSTR relative to some of these other stocks that are around $100 billion market cap. And passive flows coming from those shares that people don't want to sell is what kind of pushes this forward into a new stratosphere. Cool. Anybody else got anything else?
I think we got to wrap this up before we, jinx the price move and just let this thing keep pumping.
Let's just let it rip. Yeah.
Let people concentrate the vibes on the price and just, send this thing. It's about time.
Vibe Capital Management is doing big things, pushing the price higher, and everybody's vibing out.
We never had concentrated vibes before where we were organizing around vibes out there. So now we're there, but
yeah,
it's coffee that keeps you awake late at night to watch the price pump. I've been just mainlining this stuff, so I'm going to rip through these bags in a hurry,
But this whole thing really is a vibe, and not to sound cheesy or anything like that. But
people are going to get so pissed that we keep saying this. By the way,
it is. But let them get pissed. It's fine. It's fine.
Have your vibe moment, Adrian. Let them know.
Yeah, it's just fine. Because, and maybe Ben, you can relate to this because you've been in it for a while, just like I have. If you had told me in 2012 that by 2024, 2025, we would have companies that are not only adopting Bitcoin, but we had one of them go from 1 billion to over 100 billion. If you had told me that we would have, many other companies that are coming in trying to adopt Bitcoin on their balance sheet for a variety of reasons, and they're trying to accumulate Bitcoin for a variety of reasons. And if you had told me that we've had a presidential candidate talk about an SBR, and that we are over 110,000, and we're just kind of chilling over it. I think that this is the cycle that Bitcoiners have been talking about for a while, where Bitcoin becomes the main thing, and it stays that way. Is where I think that we're at. And the reason why I say it's a vibe and it's all about sentiment right now is because Bitcoiners are kind of running the show at the moment. This is the first time where I'm not hearing a lot of altcoin noise, and I've been searching for it. I've been looking, and a lot of these projects have kind of lost their mojo, and the concentration is around Bitcoin and leveraged Bitcoin equities. And on the tail end, you still have interest in the miners and all of that. Everything is becoming highly Bitcoin centric, which is why I think that the dynamics in this market that exists right now are fundamentally different. And yeah, it's a vibe. It's a Bitcoin vibe. I'm going to keep saying it until I annoy the fuck out of someone, but I'm fine with it. But it really is a different market. So if I were a betting man, I would say that for the first time ever, and I'm probably jinxing it, but I'm going to go with it, this time really is different.
Well, just think of all the fun we're having too. I mean, Bitcoin has the coolest people.
It does.
You guys all know it because you've been to all these events as well. Like, everybody you meet is just awesome, and you want to talk to them, and they're interesting, and they're doing crazy things that are out there. Like, it's so much fun. And the fact that we got, our group together, and the fact that we've kept a group like this together for so long, that's hard to do. And if we weren't all having a good time and just like we all found the one thing that we're the weird person in our own groups about, but together it's just very normal for all of us to talk. I think that's what a lot of other people are starting to resonate with too, right? Everyone's finding their community. They're popping up all over the place. You get to find your flavor of the type of investments you want, whether you want just Bitcoin talk or you want equities talk and you want to talk about one company or lots of companies. It doesn't matter, right? There's a community out there for everyone. And the engagement that comes with being a part of that community and the opportunities to meet people and do interesting and cool stuff is just absolutely incredible. So I'm having a great time. I don't sleep nearly enough. I got to get that fixed here at some point. But I mean, this is the time, right? This is our year. We've been waiting for it for a long time. We all knew it would come, but I don't think we knew it was going to come this quickly. And I still think that we're early to all of this. So
Early.
it's going to be a blast.
Early.
I'm happy we're
We're
doing
so early.
Yeah, and the thing about it is, though, is that, and the reason, and like Ben, what you're talking about is very, very true. Bitcoin is fundamentally different because to hold on to Bitcoin for a long period of time, you got to be a little bit screwy in the head, I believe. So we are a very unique group of people that are probably just a little bit masochistic, but also really believe in the investment thesis, really believe in the potential for it to revolutionize money and the relationship with money, all the talking points, so on and so forth. But I think the reason why we are such a unique cadre of individuals, whether we are in Bitcoin solely or in the Bitcoin equities, is that we suffer through the pain, but we still believe in the thesis, right? And we test the thesis, we challenge the thesis, but we still believe. That doesn't exist with the altcoins. They're community driven, sure, but it's a very, very different dynamic where one is here today, gone tomorrow. Bitcoin has been here since the beginning. It will be here at the end. And I think that creates an entirely different dynamic and an entirely different investor base.
There's too much nonsense in the altcoins. If you've got some central issuer and you've got a company running, like, you're open to the games.
Security, I don't care what anyone says. It's a security, period.
Yeah. This is the one asset that got released to the world for everyone to do with it what they want. And that's an asset that people can get behind and they can support and they can build conviction around. Like, I can't build conviction in a coin that can change its issuance policy overnight if they want to. I'm not putting any real capital in that. You got to be out of your mind. So you need something like Bitcoin that is, it's true freedom money, and it's decentralized. It's out of the control of any one group, company, country, doesn't matter, right? I mean, you can believe in Bitcoin. This is something you can really get behind. And once you see the reason why you're holding this asset, you get real comfortable because you know that it's a matter of time before everyone figures out what you've already figured out, and they're all going to come in the door. So we're in the waiting period. We already know we we won, and we know that we're sitting in the right position. And now it's just time. It's time, and let all these broader shenanigans run their course. And best thing you can do is allocate and sit on your hands and just wait.
Yeah, don't get cute. Just let time do the work for you.
Yeah. Don't get impatient and trade your way out of a winning position. I mean, there's just no need for it. You watch all the news all around the world. You look at all the talk about rates and easing and all the things that are coming. Like, they have to play games to keep a credit-based system afloat. And so if you've already opted out of that, we're just sitting here in the one asset that is completely inelastic supply to the demand. And you know that when that demand arrives, the only thing that can give is the price, because the supply isn't moving. So you get real comfortable in that trade when you watch everything else happen.
And once you have Bitcoin in cold storage, and this is a point that everyone needs to really, really marry themselves to, it is yours. Cannot be taken from you. Your real estate can be taken from you. Your equities can be taken from you. Your Bitcoin can't be, once it's in cold storage. Remember that. Never forget that. That right there is what makes it unique.
Yeah, move your Bitcoin to cold storage. Go through that process. If you haven't done that, this is your call to go do that. Go figure it out this weekend, because it is a very empowering tool once you do that and you kind of see how that entire process works. Yep. And somebody brought it up here, and I've said this a ton of times, right? Like, my thesis in understanding what's going on with MSTR, this is going to be the largest company on the planet, right? This is the new, this is the Apple of 1998 that you're buying for, 82 cents. Like, everybody has that uncle or that relative that they've told you that story. Like, oh, I could have bought Apple at 82 cents back in 1998 or, whatever. And you're like, okay, well, you didn't, and you wouldn't have had conviction to hold it. Even if you did, you probably would have sold it the next year. We're in a very similar place here with what's going on with MSTR. What's going on with Bitcoin. There are shiny things, and each product has different risk return metrics. And I just if you're considering all of those things, think about that. Think about the stress on your life to be able to watch those things and manage those things. Like, if you're fully porting and YOLOing something, like, that's a lot of stress and time and energy on your entire life, and you got to quantify whether or not that's worth it for you. I've told my story of my GameStop experience to many people, and I ruined a whole week with my wife on vacation. I wish I could have got that back. And like that, following that energy and being that close to something on full yellow on one thing, aside from MicroStrategy, because I had so much conviction in it, is it's difficult to do. Be prepared to do that.
Yeah. And we've talked about it before, but with something like Bitcoin, it becomes that only peaceful part of your portfolio sometimes. I mean, I haven't pulled up Bitcoin accounts in a very long time because it doesn't matter. I'm not doing anything with it right now because I know where we're going. So it's that one peaceful thing that you own, you control. And because of that, you can just sit comfortably because you've done the work, you've positioned it correctly, you've secured it correctly, you're ready for what comes next. A lot of people aren't. And This is the planning that sets you up to buy your freedom back later in life. I mean, it's very freeing when you do hit that point when you've made the investments that outpace your income from your job, and they put you in that position of freedom where you now get to go get your time back, because that's the only asset you've got that's more important than Bitcoin. And the sooner you can get that back and you can control your life and focus on the things you really want to focus on instead of the things that you currently have to focus on, that's a different way to live. And you can become much more passionate about what you're doing. Retirement never means that you're done doing anything. It just means you're done doing things you don't want to do anymore. You're focused on the things that really light you up. And you're seeing that, people that are watching, you're seeing that with Jeff leaving his job, right? Bought his freedom. Now he just wants to focus on Bitcoin. You're seeing that with a lot of people. You find that one thing that lights you on fire and you double down on that, and you just you put the gas to the floor and you go, and you have a great time doing it. It never means you're done. It just means that you're evolving and you're pivoting to what you want to be doing. So put yourself in that position where you can get that outcome for yourself, because it's the one thing in your life that you'll never regret.
Yep.
You did what you had to do so you can do what you want to do.
Exactly.
Think about it.
Bingo. But before we go, final thoughts, and that, I mean, could have been it, but there were a couple questions I think that are worth addressing Somebody asked what kind of cold storage wallets I use. Got Trezor, Blockstream Jade, in the BitKey. I've kind of used all those, played around with all of them. They're kind of fun. I mean, Cold Card is the other one. If you're interested in watching how to do that, go follow BTC Sessions on YouTube. Go buy your Bitcoin on Swan Exchange. There you go, Ben. Shout out.
I appreciate the shout out.
You're
Shameless
welcome.
plug.
One thing I'll call out, because it does make a difference to a lot of people, is, some people want someone there to talk them through that process of getting into like a multi-sig arrangement. And Swan, as far as I know, is the only place that actually has advisors. You can talk to the person and have them handhold you through that process if you're not comfortable doing it yourself. So, shameless plug there, but I think that's a really important service for a lot of people who are just getting into this and don't have, the tech savviness to be confident in doing it themselves.
Yep. And your private keys are important. Yep.
Very.
Absolutely. They're way more important than the wallet itself, but private keys are important. The other thing, somebody asked about the lawsuit, and very interesting that there was a huge short interest. It's like Jim Chanos came out, says like, I'm short MSTR, and then they're like, oh, interesting, class action lawsuit that comes out the next day. Very suspect timing. It's really just a money grab because you got a $60 billion company that is willing to probably pay a little bit of something to make those people go away. It looks like a nothing burger. I've read through it.
Not at all coordinated. Not a chance.
Yeah, probably not. I think it's pretty common. Interesting enough, the other company that's over $100 billion valuation, AppLovin, is also getting short interest. They're like sending the S&P 500 letters to say don't add them to the S&P 500. They're sending that to the committee, and they also have lawsuits out on them. So it's interesting that you see these valuations kind of percolate and go higher, and then there's attacks that go after them. Cool. All right. Maybe final thoughts. Dan, over to you. You've been a little quiet, but that's okay. You got final thoughts?
I like listening to you guys talk. Yeah, final thoughts. I mean, don't let the price get to you. I think Bitcoin's ripping. That's fantastic. The BTC game will be really great, and lawsuit isn't a big deal. I know there's a lot of people. I think you need to step off Twitter and make up your mind about your investment thesis, and then come back to Twitter and use that perspective to inform your decision making. So that's really important. Don't let the Twitter noise change your course, steer you off course.
Yeah, and I mean, like, just go look. Like, literally, you could see hundreds of people that have sold their MicroStrategy to go, follow MetaPlanet or go do other things, which is like, okay, like, more power to them. Like, if that's what you want to do. There's risk associated with that trade. There's, you got to pay attention to it. All of those things. I think that's good sage advice, Dan, from somebody that's a little bit younger. Good advice. Not financial advice, just good advice, good life advice. There's more to life. Go touch grass. My best part of my day today was like the 20 minutes I was outside throwing the ball for my dog. It was just like blissful. I was in the sun, took my shirt off, getting some sunshine. It was amazing. Anyway, Ben, over to you.
Yeah, no, I've already said a lot. So thank God Dan likes to listen to us talk, because we're not capable of shutting up. I think people know that by now. But along his lines, don't rent your conviction from anybody else, right? Build your own, because if you're renting it from other people, you're going to get shaken out of your positions well before you should. So just make sure you do the work. I mean, it's well worth it. It's a really important part of your life. Investing is. It is what buys you that freedom ultimately, right? You build your asset base, you deploy it. It starts doing the work for you. So it's a really important thing to be engaged in. So make sure you're building your own conviction, digging into each of the investments that you want to be a part of. And if you've done the homework, you can ignore the noise and you won't get shaken out when other people start getting nervous or jittery or talking bad about it, because you'll know what's happening. So chart your own course, stay on it, execute in the long term, reap the rewards.
Bingo. Yep. Adrian.
Oh yeah, I think Dan and Ben have hit the nail on the head on a few different points. I'll just echo some of that sentiment. If you are online too long and you're seeing people making predictions or sharing their opinions and whatnot, and you're referring to them versus doing the work yourself to understand what your investment thesis is, I think that you are doing yourself a great disservice. Whether it's us, whether it's whomever, you should be able to trust your own judgment and trust your own analysis and trust your own insights before you trust someone else's. If you are going along with what everyone else says, whether it's pro or con, I think you need to do a little bit of self-analysis and self-reflection to figure out why it is you're doing that, because you're essentially outsourcing responsibility at that point. You're responsible for your own outcomes when it comes to these investments, and you should treat it as such, no matter what anyone says, whether it's us or anyone else. And that said, NFA, but sometimes the best thing to do is sit in your hands. Once you've got a winning hand and you play it, step away from the table and understand what you have and understand the opportunity that you have there, and be willing to live with the benefits and live with the consequences. That's pretty much the best advice I can give.
Own your outcome.
Own your outcome, and yeah, try to assess risk. I mean, everybody's rethinking what risk is now in this new digital framework of Bitcoin treasury companies. Everybody's trying to figure it out, and there is risk. There's risk everywhere. I think risk is probably mispriced everywhere in the market: the stock market, bond market, equity market. And think about what risks are of every transaction. But there's a lot of bullishness on the horizon. I mean, obviously, we're in price discovery with Bitcoin. Last time Bitcoin was in price discovery, it moved 37% in 18 days. It moved 50% in 50 days. So if we have a very similar type situation here, and companies that are putting their foot on the gas right now with just incredibly strong financial positions, this is a whole different ball game than where we were in November, or where we were in past cycles. We've got Bitcoin treasury companies that are ready to just attack and just put as many sats on their balance sheet as humanly possible. So exciting time to be in Bitcoin. I'm looking forward to all the other people that are potentially going to exit the rat race, the fiat hamster wheel, and move into growing the Bitcoin network and the Bitcoin ecosystem. Also, super excited to see anybody next week. We've got the Bitcoin Vegas. We're going to have no show next week. If you see us, come say hi. There's going to be 35,000 people there. I'll try to say hi to as many people as possible. And yeah, looking forward to it. It's going to be a ton of fun. And yeah, good vibes all around. All right, I think we're going higher.
Going higher.
We'll catch you all later.